Hello guys, what's up? Welcome to Crypto Boost. In a fight between US authorities over how to monitor stablecoins, Wall Street's top watchdog won concessions, paving the way for the Securities and Exchange Commission to crack down on the $131 billion industry. In today's video, we're going to talk about this crackdown and what effect this will have on Bitcoin. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. The report, according to sources, will urge Congress to pass legislation specifying coins that should be regulated similarly to bank deposits. It will also clarify the regulatory jurisdiction of the Commodity Futures Trading Commission and Treasury Department with regard to stablecoins. Bloomberg sources claim that Gary Gensler, the SEC chairman, has been pushing for further expansion in the SEC's regulatory domain over stablecoins, including allowing the commission to pursue enforcement actions against issuers. Gensler also reportedly sought to clarify what powers the SEC has to oversee stablecoin-based investment transactions. The Treasury's report was announced during a meeting of the President's Working Group for Financial Markets in July, with the PWG stating its intentions to explore creating a new type of banking charter for stablecoin issuers, among other regulatory measures at the time. Stablecoins are meant to be less volatile than cryptocurrencies as they are pegged to fiat money like the US dollar. This means companies backing them typically commit to keeping collateral to ensure investors can exchange the tokens for regular money. But Tether, one of the largest stablecoin issuers with a $70 billion market cap, has been facing heat over whether it's truly backed by actual dollar reserves at all. In February, it reached a settlement to pay an $18.5 million fine to end a New York probe into reserves backing its coin. More recently, it was ordered by the CFTC to pay a $41 million fine for untrue or misleading statements about its US dollar reserves. The President's Working Group on Financial Markets is preparing the upcoming report with the aim of ensuring stablecoins don't threaten the economy. Bitcoin continues to lead the way in terms of crypto conversation, investment trends, and market capitalization, but the reality is a little more complicated than some commentary might have one believe, especially with the announcement that PayPal is now allowing customers to transact in Bitcoin. It is all too easy to assume that this is the only main story in the crypto space. Cryptocurrencies and cryptocurrency applications continue to emerge and develop rapidly, but to date, the conversation has been dominated by Bitcoin. Price volatility, of course, does tend to make headlines, draw eyeballs, and lead to increased financial interest as well as conversation. That said, more allegedly mundane versions of cryptocurrency, stablecoins, look increasingly like the method by which crypto will achieve mainstream adoption and utilization. Considering the stability of stablecoins, many investors may move towards it after SEC has imposed bank-like regulations on the same, making it more secure. This might adversely affect Bitcoin price. Bitcoin investors must keep their eyes open during this time. So that's all for today's video. Let us know your views in the comments section below. And don't forget to like this video before leaving. Thanks for watching.